Hey folks, Dan Bird here with the Daily Scan, Technical Tuesday for Tuesday, November the 18th. The topics tonight are rate of change. I had a subscriber ask me to go over that, so I'll cover that one. And then Thinkorswim, how to create a watch list. I'll show you how I do that and then how I use the watch lists, which is actually a pretty powerful thing to do in Thinkorswim. So first off, let's talk about rate of change. This is from stock charts, of course. In stock charts, there's a chart school. It has all kinds of topics. I don't think you even need to be a subscriber to stock charts to get to chart school. So if you want to learn anything about technical analysis, this is definitely the place to go. So what is the rate of change indicator? It's basically a pure momentum oscillator. So it measures momentum of a stock, compares the current price with some number of periods ago, and then it plots an oscillator that fluctuates above and below a zero line. So above zero means that it is positive momentum, below zero means it is negative momentum. Here's an example down here of the Dow Jones with the price going down right here, and you can see the rate of change. In this case, this is a daily chart, and it's 12 days. So the period here is 12 period. We're on a daily chart. So that says 12 days. When it goes below zero, which is basically right in this area right here, then the rate of change or momentum is declining, and that means the price is declining as well. So that's how to use rate of change. The way to interpret it, this is the calculation, which I'm not going to get into, but if you're interested, you can certainly check that out. Rate of change indicator is momentum in its purest form. Measures the percentage increase or decrease in price over a given period of time. So there's some ways I'm going to show you here, and it shows it here, and I'll show you how I use it, and it's on the website. But in this case, they're using multiple time periods. So approximately 250 trading days in a year. Technically, there's 253. Can be broken down into 125 days in a half a year, 63 and a quarter. I use 65. That's typically why I use 65. There's 65 days in a quarter. And then 21 days in a month. These are trading days. So trend reversal starts with the shortest time frame and gradually spreads to the other time frames. So the shortest time frame basically shows you the rate of change before the longer ones do. So what you see down here is the 21 right here. So this is the daily, this is the quarterly, this is a half a year, and this is a 1 year rate of change, the green one. And you'll notice up here, when the green one crosses right here, it's already gone up. So what you want to find is when the daily is starting to move up, and the other one, at least the next one, the quarterly, confirms it. And that happened right about here. So the daily rate of change sometimes can actually start happening before the price starts to move up. So it sometimes can give you some advance warning of what's going on. But in general, it's showing you momentum of the price movement. It'll show you overbought and oversold extremes. So in the case of Aetna down here, you can see that it was oversold when it went down to the -10 level. You see the zero level right here. So oversold when it's extreme gets to -10, and it's still moving down at that point. But when it starts to move up and goes back above that -10 area, that's when the price is starting to move back up again. So that's the way you can use this. You can watch the zero line as well, but it's really the extremes down here that really help you to identify something ahead of time. Here's Microsoft. So with Microsoft, you have an upward moving price, and the rate of change goes above 10, so it's overbought right here when price reached its maximum. And then even though the price continued to move up, rate of change started to move down. So that is a bearish divergence. You can use the divergences with rate of change as well. So when this makes a lower high and the Microsoft, the price is still making a higher low, that's giving you a clue that maybe a downtrend is about to start. So that's a way you can use rate of change. Abercrombie right here actually includes a 20-day moving average. So you can use the rate of change in conjunction with the 20-day moving average. I like to buy when the price crosses the 20. 21 actually is what I use. but it'll be pretty close to the 20. So you can see the extreme and -10 down here. It crossed below it and then started to move higher. So at the point where you've identified, you've confirmed that it's moving higher, because it could stay down here actually. But the point where you confirm that it's moving higher is right about here, which actually happens to be the absolute low. So you can see right there where it's starting to move higher. That was the low. So that is a positive divergence. Price is making lows and rate of change is making highs. So that's another way you can use it. You can also add a 5-day simple moving average. For me personally, I think it's a little too busy, so I don't use it that way. Bottom line, rate of change measures the speed at which prices are changing. An upward surge in the rate of change reflects a sharp price advance. A downward plunge indicates a steep price decline. So you can see right here, rate of change was surging higher right here, and the price was going up. And then the rate of change started to move lower, price was still moving higher. The important thing here is positive readings may be less than before. Highlight this. Positive readings might be less than before, but a positive rate of change still reflects a price increase, not a price decline. So as long as rate of change is above 0, it reflects a price increase, just might be not as much of an increase. So like all indicators, should always use in conjunction with other technical analysis. Using in sharp charts, I'll show you how to do this right here. And these are some scans you can use. And now let me show you how I use it. And I actually have it on the website for subscribers on the charts page, right up here near the top. You see rate of change, S&P, NASDAQ, and the Russell 2000. We'll look at each one of these. So first, let's look at the S&P rate of change for this. And what I've done is I've done this on a weekly chart. So these down here, the 12-month is a 52-week. See rate of change, 52. Here's how I created it down here. Price performance, that gives you the 0 line. $ symbol, so I can put any symbol that I want up here, and it will calculate the rate of change. I make it invisible because I don't want to see the actual price movement in my charts down here. I just want to see rate of change. And then I make a height of a half, so that's half as much as the regular price chart. And then I add an overlay. So there's lots of different overlays. You can put moving averages in here, Keltner channels, Bollinger Bands, etc. In this case, I'm just using rate of change as an overlay, and the parameter is 52, 26, or 13. So 52 is 52 weeks because it's a weekly chart, 26 weeks, or 13 weeks, which represents 1 quarter. And as I said before, the rate of change begins moving with the shortest time frame first, and then the other ones typically follow along. So you can see for the S&P where we are, and these vertical lines that I put in here is basically the bottoms, just to give you a sense for what rate of change looks like at the bottom of the price movement. So you can see at the bottoms on each of these, rate of change was bottoming. Now you don't know that it's bottoming until it starts making a higher low, of course. So if you watch the 3-month, you can see that it's already made a higher low. We hit the bottom right there. So there was a low right there, and then it went up and made a higher low. So that actually ended up being the bottom, although it came back and tested it a couple of more times. So you can see right here where it was testing it, actually went below 0, again right there, and then started to move higher. Right now, we are moving lower on rate of change. On both the 3-month, the 6-month is coming down, and the 12-month really has not, even though the price has moved higher, the 12-month has not really moved up that much. So there's a negative divergence on the 12-month, even as price has gone higher. So that is a little bit of a warning sign, but rate of change can help you to identify things like that. You can also look at the NASDAQ 100, same kind of thing. This kind of chart you just glance at. So you can see we're getting close to the 0 line right here. The 6-month, still a little ways away, and the 1 year is a ways away too. By the way, 0 is over here on the left-hand side. That represents rate of change over here on the left. So It right now is above zero in all cases. So price, that means generally price is still moving higher, even though we're getting a pullback right now. And then finally on the IWM, you can see too, 3-month actually is sitting right on the zero line. 6-month is still above it, and the 12-month is sitting right on the zero line as well. So this is clearly showing that it's about to go into perhaps an extended downtrend. So we don't have a bottom yet. That's when it's below the zero line, but that's something to watch for. So keep an eye on that. You can also use that for other individual stocks. So remember the way I set this up down here, I put in $ symbol, which means anything I type in up here will give me the rate of change, the same rate of change for the symbol. So here's NVIDIA, and you can see NVIDIA now is sitting right on the zero line for the 13-week, the 1 quarter, and still above for the 65 or 26 weeks, sorry, half a year, and the 1 year is still above zero as well. In general, the price is still moving up, but rate of change is coming down. So momentum is declining over a 1 year period. It's starting to move down on the 6-month period, and it's definitely moving down on the quarterly period. I can actually put in another level here, do price performance, put in the symbol again, make it invisible, make it half so they're all the same, and then add a rate of change right here. And in this case, I'm just going to make it a rate of change of 1 week. Oops, 1 week. So now you can see, it looks like a EKG, but in this case, it's actually below zero. The 1 week rate of change is actually now below zero, and looks like it's accelerating now to the downside. So that's not a good look for NVIDIA going into earnings, but earnings could change everything, of course. But that's the way to use rate of change. You can play around with it on different charts, different ways of looking at things. You can start with the ones right here if you're a subscriber. Rate of change is in this blue panel near the top for the S&P, the NASDAQ, and the Russell 2000. Now, before I go to Thinkorswim, let's quickly take a look at the dashboard and just see where we are right now. So the S&P is making a comeback. You can see here's the open right here. So S&P starting to come back up. NASDAQ 100 just slightly below the open. The VIX now is at 23. It made it all the way up here to 2550, almost 26. So the VIX was very extended. It's pulling back now. So that's good news. You can see right here, it's actually a shooting star on the VIX. And it's starting to come back down, but it is still very elevated. So right now it's still at 23. That's well above 20. So bears are still in control, even though it might be pulling back a bit. But bears in general are still very much in control. Now, if I go back and let's look at the market carpets. And interestingly, when I looked at this morning, almost everything over here was red. But right now, Apple now has turned green. Google has turned green. Broadcom has turned green. Oracle has turned green, although it's way down. Palantir is still red. Amazon is still red. Microsoft, NVIDIA, still red as well. But these are actually improving. They're looking much better than they did originally. Tesla's still red over here too. The big performers right now is SMCI is up there, Medtronic, Warner Brothers, Netflix making a comeback. Netflix is, where is Netflix? Right here, communication services. It's the darkest green of all of them. So Netflix is actually looking pretty good, up 3.8%. So it looks like the market might be recovering from the initial sell-off. If I look at it on the same charts that I showed this morning, I'm just going to do the first one, the S&P, see what it looks like. And there's what it looks like. I showed it right down here when at this green bar, pulled back a little bit and then went higher. Right now it's consolidating sideways right in between the moving averages. So we'll see if it breaks out to the upside. Right now it is almost 3 o'clock, so it's got about an hour left in the afternoon on the East Coast. So we'll see how that pans out. All right, the next thing I want to show you is Thinkorswim. This is one of my Thinkorswim chart setups. I've got a daily chart here on the left. This is for the S&P, and I have a 30-minute chart on the right. And down here is the squeeze. This is a Squeeze Pro, and I've got the ADX lines at the bottom. So, and the color coding on this, normally with John Carter's momentum, which is also in here as well, by the way, but none of these have a momentum arrow on it, so you're not seeing any right now. But on the momentum chart, these green ones here, I use the impulse system rather than his momentum system. His momentum system would show blue if it was an up momentum, and it would be gray if it was neutral. I like this a little better because it actually shows these all would be gray under his momentum system. But because I like to actually see when the price is moving up, I like to see it in green. Then I use the impulse system, which I've covered before in a Technical Tuesday. Impulse, basically, if it's green, it means that it is both trend and momentum is positive. If it's red, that means both trend and momentum is negative. And if it's gray, or actually blue, but I changed it to gray, gray means it's neutral, meaning it's neither positive nor negative, or one of the two of those is plus or minus. So that's what it looks like. You can see there was a squeeze down here. It's actually still in the squeeze as it's going down, but the bar is still a hammer. Like I said this morning, if this stays a hammer by the end of the day, this could be a reversal. And you see over here, these big green arrows right here is the momentum reversal signals from the momentum system. So the S&P right now is starting to move higher. Now I'm going to expand this little piece over here because this is where I have a 10-minute chart. Now I can see the S&P on a 10-minute. And just like I showed you before, it's right in between the moving averages. I can see if it's actually going to start to move lower, which looks like it probably will because momentum is rolling over right here. So this is probably going to start to move down. We'll see how much it does over the next hour. But more importantly, and really what I want to cover, is the watch list up here. So this is my momentum watch list. You can see the one at the very top is up 8% today, is Nebius. And I put these little buttons here. You see that I'm syncing my charts with my symbol. So if anything that has a yellow box right here are synced. So if I have a yellow one over here, I can sync it with all of the rest. And the way you do that is you just right click on one of these headers. You click on last or symbol or any that you want. Click on customize. And what I'm using is send to red or send to yellow. And on the left-hand side, if you scroll all the way down to the S's, there you can see the colors, send to blue, send to green. So you've got 9 different colors over here, and you've got 2 over here. So there's actually 11 total colors, but I'm using red and yellow. In this case, I'm just going to use the yellow one. But that's how you do it. You just, at the very top, you can add this as one of your columns, and then it makes it very easy to have all of these charts sync with each other. So for instance, LQDA right here, moving up nicely. There you can see the momentum arrows, the blue arrows right there. So in John Carter's normal momentum system, the bars would be blue as well. Anytime you see a blue arrow, you would see a blue bar. And if it wasn't a blue arrow, it would be a gray bar. But because I use the impulse system, you can see these bars here are actually green, whereas in his momentum system, they would be gray. But I'd rather see them in green if they're moving up. And so the current one today has a blue arrow, which means it is momentum. Momentum is pushing it higher. And then if I look over here on the 30-minute down here, you can see where the momentum bars and the squeeze actually fired, and right on this momentum arrow started moving up. So that would be a great time to get in, and it's continuing to go up. Over here on the 10-minute, you can see the squeeze over here fired right here on this one. And then I got a green arrow right here. So you can see on the right-hand side where that is. That would have actually got you in a little bit earlier. But what I really want to talk about is creating a watch list. So first thing I'm going to do over here is I'm going to click on this. This is the name of this watch list. I'm going to click on that, and I'm going to go down here and say create a watch list. And I'm going to give it a name of Test Tech Tuesday. So that is my watch list. So now I've created one, and you see it's in here already. The next thing I want to do is populate it. And the way I populate it is by importing into this watch list. Now, what do I import? Well, let's go back over here to the website and go down here. I can use this right here. There's a number of different watch lists on here. I can use the top 10 stocks if I want to. These are all CSV files. I can go to the chart lists and scans page, and now I can use the relative outperformers. You see there's 311 of those this week. I can use the short squeeze candidates if I want to run some scans on short squeezes or just see what they are. This one here is the ones that are short squeeze and relative outperformers. Both, they're in both lists. There's 61 of those. And then down here is the momentum list. The difference between the momentum and the top 10 lists is the momentum list deliberately includes the big cap tech names. They may not end up in the top 10 lists because they're not always in the top 10, but I make sure that they're always in the momentum lists, no matter what they're doing. Even if they're going down, they'll still be in that list. And this shows you the criteria for each of those. So let's say in this case, I want to use the short squeeze that are also in relative outperformers. So I click on this button right here up in the upper right for downloads. You can see that it is I'll do open file. And this is what it looks like. So there's the file right there. I can leave it like it is, or I can delete columns if I want, just have just the symbols. But I think I'm going to have just symbols. There's 61, should be 61 of them. So I'm going to do it like that. You can look at these watch lists if you don't even want to import it into anything. But there should be 61 of these. So now I'm going to save as, and I'm going to save it as, put it in a folder. And short squeeze with relative outperformers. So it's in this folder right here, Documents, Breakpoint. All right, so now that watch list is saved. I can close this and I can go back to Thinkorswim. And now over here, I've got this test watch list that's blank. What I want to do is I want to import from a file. And the file I saved it as was Breakpoint short squeeze with relative outperformers. You can see the date, 11/18, right there. By the way, if you use Microsoft 360, which is the cloud version of Microsoft, even if you're on a different computer, if you're connected to the same cloud, connected to the Wi-Fi, then this will appear in the other computer as well. So you don't have to actually send it to the computer. It will just pop up just like this. So that's the one I'm going to use. Double click on that. And there's the watch list right there. Now in this case, I'm going to replace my current symbols. So if I have a folder that already had been created and I just want to add these to it, I can add to the current symbols. But what I typically do is I just replace it every week. I change those watch lists. Those watch lists are updated every weekend. And those are the ones that I use. So I just download them every week into my Thinkorswim and I replace the current symbols. So I click on OK, and there it is right there. So all of those, these are all of the short squeeze candidates that are also in the relative outperformers list. And notice now I've got the little yellow button right here on the right. If I click on that, I can see Wolf. You see it's got a green bar here on the daily chart. It's got momentum arrows on the 30-minute chart. And here's the 10-minute chart, still moving up. Wriggle is in here. That one has a nice chart right there. This is LQDA. This actually came up on the short squeeze list today. So this is a short squeeze candidate. It's got extra volume, more than average volume. So that's where that is. So here's Solar Edge right there, just coming up off the bottom. Maybe it's making a recovery right now. But that's the way you can create a watch list and then use it in Thinkorswim. Here's Lemonade. Let's see what else we got over here. Cypher. Cypher is in the short squeeze list as well as the relative outperformers list. By the way, relative outperformers means they're outperforming the S&P by 7% and also outperforming their own industry group by 10%. So they have to satisfy both of those in order to make that list. ASTS is on here. You can see most of these are green up here. There's Rocket. Someone had asked about that. Rocket right there. So here's a green. The dark green says that it's just going above the 21. The light green, larger one says that it has reversed the negative momentum. So you can see the yellow arrows right here. That's negative momentum. And the reversal, meaning that the negative momentum is slowing down. This is a big green arrow right there. Even though it gave one more momentum bar, it's basically saying this trend is done. It's over with. Same thing on the upside. It means the uptrend is done. So that's what it looks like. Hopefully that will help you to understand how to use this. I hope that's very helpful. Let me know if you have any questions or comments, and I'll talk to you tomorrow. Thanks.